Just months ago, the Ghanaian cedi shocked the world. It staged one of the strongest comebacks in Africa, rising sharply against the US dollar, bringing a sigh of relief to the traders and citizens alike. Many thought the storm was over. But today, the hope is fading fast. The city is tumbling again, losing ground, sparking fear, and shaking confidence. From a celebratory recovery to a worrying freefall, and yet the Bank of Ghana insists this is only a short-term blip and gave in-depth reasons. Could this really be true? Come with me, let's dive into what really went wrong with the city and the bold claims the central bank is making right now. This is First Africa Voice, where we tell African stories raw, real, and without filters. Ladies and gentlemen, welcome to the channel. My name is Paul Limba. Today, we are decoding the drama behind Ghana's falling currency and what the Bank of Ghana Governor, Dr. Joseph Asiama, says is simply a cedi blip. Now, let's dive into the story and break it down together. Over the past few months, Ghana cedi has slid from 10 cedis, 40 pesos to over 11 cedis per dollar in commercial banks, driven by tightening foreign exchange flows and higher import demand. What they are saying is just a temporary cash flow glitch, not a systemic collapse. He emphasized that Ghana operates under a managed float exchange rate system, meaning occasional swings as expected, but that long-term stability is achievable.
Through that entire phenomenon, we kept saying it, that there wasn't a specific exchange rate that we were targeting. Remember, the exchange rate, as we always say, is an endogenous, variable. It must move. It can move by the minute, it can move by the second, it can move by the day. And that is the framework we have, what we call a flexible and managed floating system. That is what we maintain. Now, when a currency appreciates sharply, it brings on board other phenomena. And we are beginning to see some of those phenomena at play. For example, immediately imports become a lot cheaper. And so you find that people who wouldn't have been settling their import bills that early, they find it cheaper to do so. And so it's just natural to begin to see pressure build up on the currency just because of the sharp appreciation that occurred. So for us, what you see out there as pressure is just a cash flow. The macroeconomic fundamentals are very strong. As at the end of June, you saw all the numbers, growth is strong. The external sector is very much viable. The current account is very strong. You've seen the surplus. You've seen the trade account. The balance of payment is as strong, strongest than ever before. And so in terms of the macroeconomics, nothing has changed. Things are actually looking good. Inflation is on the downward decline, as you know. And so ideally, there shouldn't be pressure on the local currency. Rather, what is happening is just because of the sharp appreciation, we were beginning to have some, some cash flow problem.
He insists the Bank of Ghana has adequate foreign reserves and has not run out of dollars. The bank is actively closing loopholes, such as Forex exchange leakages from remittance agents, while increasing interbank market liquidity.
Again, because we've seen some decline in terms of remittance inflows, that also I can explain the phenomenon at play. We've had some IMTOs and other remittance companies beginning to pull a fast one, beginning to use other channels. Over the last 2 months, for example, we have seen very limited interbank trading. And so you find that unless the central bank is there, supporting the market, then you would see pressure building up. So when you talk about market demand, it doesn't have to be the central bank alone. Remember, the banks ought to have their own inflows that accrue through remittances, inflows that accrue through trade. It is true that certain inflows, like from mining, for example, those accrue to us. And so it makes sense that we support the markets using, those inflows that come in. And so one of the things we have done this week is we have written to the mining firms, right, for such inflows to be redirected to the commercial banks. And all these is meant to help, improve interbank trading, in Forex. That way they are able to support imports and other flows without necessarily waiting for the central bank to come in with some support.
Bank of Ghana is not abandoning the floating rate. It is not going fixed. Instead, it acts as a buffer against sharp instability. This means the cedi will fluctuate, but only within a controlled band. But not everyone is convinced. Economist Kweku Adobole warns that much of the cedi's past appreciation was engineered by Bank of Ghana's heavy foreign exchange interventions, especially over the past 2 months. Without deeper structural reforms, the currency could slide again. His exact words, foreign exchange intervention by the Bank of Ghana have temporarily strengthened the cedi, but with the structural economic changes, the currency is sliding back, raising questions about the sustainability of these policies. The amount of dollars that is being extended is more than what they have on account. Once you go below the zero bound, the currency risk becomes unanchored, and that can lead to spirals, more devaluation, and inflation, he warned. Meanwhile, Prof. Godwin Bupi of the University of Ghana says predictability is key. He feels a stable exchange rate somewhere between 10 cedis and 12 cedis per dollar is the best goal, instead of sudden swings up or down. His exact words, I have indicated much earlier that the central bank was targeting an exchange rate. They didn't want to communicate that to the market at the initial stage, so it was not just more recent meeting where they decided on it. That is why we said that what we witnessed in terms of the strengthening of the local currency was not just the forces of demand and supply. There were some interventions to cause a strengthening, he said. We were confirmed that the rate of facilitation was too aggressive to enable planning and the entire economy to adjust to the strengthening of the currency. And to that extent, you could not describe that as stability. That was more of a disruption. The disruption could cause negative or positive effects, and it was very difficult for people to play along or even play. It was quite unsettling, he added. It is also good that there is now some level of clarity that yes, we need to stabilize beyond aggressive strengthening. Stability is preferred over swings, whether appreciation or depreciation. It is neither good for business nor for central banking in the first place, he said. Of course, we also do note that stability in economies is not the same as the same price or fixed price over time. We still expect that there will still be some kind of variation in the rate, but it should not be significant enough to cause disruptions or uncertainty when it comes to planning, he noted. Why it matters for Ghana: businesses suffer, importers face rising costs, unstable foreign exchange makes pricing and planning nearly impossible. Consumers suffer when the cedi weakens, food, fuel, and medicine prices climb quickly. Borrowers suffer, many loans are in dollars, adding repayment pressure. If the cedi doesn't stabilize soon, Ghana risks losing investor confidence and slowing down its economic momentum. The sharp fall of Ghana Cedi is not just a Ghanaian problem. It reflects the wider African economic struggle against global financial pressures. Ghana Cedi crash is a warning, a lesson, and an opportunity. It warns Africa about external dependency, teaches lessons about debt and governance, and opens the door for Africa to rethink its financial future. Dr. Asiema calls the cedi's rough patch just a blip, but hope remains fragile. Stability isn't about magic fixes. It requires fiscal discipline, good governance, and smart intervention. Will Ghana's authorities hold steady and give the economy the breathing room it needs? That question will define the road ahead. What do you think? Will the cedi rebound quickly, or is just the beginning of a deeper fall? Drop your views in the comment section. Don't forget to like, share, subscribe, and turn on the notification bell for more powerful African-focused stories. Well, the dew of the day has crept upon our thoughts, and nature must obey its necessity. Here is where we bring down the curtains. Until we meet again, my name is Paul the Lingua, the Africa Orator.